As we wrap up the month, half of Hollywood looks to be going back to work because, the world was hurting so much without late night TV. On the other side of the fence, we have the United Auto Workers who just began their strike to force the automakers of Ford, GM, and Stellantis to play into their hands. Only about 12% of the union members are participating as of now, as they're seeking higher wages, better benefits, and get this, a 4-day work week, which I can totally get behind. But as you're gonna see later on in this video, a 0-day work week, that sounds even better. However, when striking, employees do not get paid their usual paychecks. But why am I mentioning all of this? Have I sold my soul to the unions? More so, I just wanted to highlight how dependent people are at their day jobs for all their income. On this channel, we're always exploring other ways to make money that empower you to be in control. This is typically done by buying assets like stocks or real estate, certificate of deposit, CDs, bonds, you name it. My favorite method of passive income though is dividend investing. Since I started my dividend investing journey in 2018, I have seen my monthly dividend payments get bigger and bigger, and this is regardless of any market conditions. While my portfolio balance will meander throughout time, my dividends received graph is in an up and to the right direction. Now, I'm able to do this by buying high quality companies, by buying high quality ETFs that share a portion of their earnings with us. And the best of companies, they give a pay raise every single year. Let's take a look at what companies did that in the past month. We have Main Street Capital, a BDC with a supplemental dividend of 28 cents. This is one I've had on my radar for quite some time, only a matter of time before I welcomed them into my portfolio. Now, I know a lot of you love that sausage pizza. We have a lot of sausage pizza lovers watching, so that's why we got Papa John's Pizza with a 10% pay raise. Now, how about this, guys? Federal Realty, a REIT, has increased their dividend by a whole 1%. Not much, but this is the 56th straight year of an increased dividend from this REIT. That's a pretty good track record of consistent payments. Altria Group is a dividend lover's dream. With a 4.3% increase, an amazing record of paying dividends for MO. Intuit, the tax preparation company, with a juicy 15.4% dividend raise. Imagine getting that big of a raise at your job. Alright, now for the real reason you actually clicked on this video, all the dividends I received in August of 2023. So to start off with, we have the income ETF of JEPI paying me $14.22. This is a really low month for JEPI, just 29 cents a share, but they did rebound in September at 34 cents a share. Relax, the world isn't ending because JEPI dividend payments weren't as high as they were last year. This is a risk you take when you get ETFs that have variable dividend payments. This is why we're diversified, and that's why we own other great companies like Lowe's, which paid me $10.71. So Lowe's in fiscal year 2022 lost nearly $1 billion in inventory shrink, and this is because of widespread looting and shoplifting. When people shoplift with no consequences, that means actual law-abiding people like us have to pay higher prices, stores could get shut down, and worst of all, this is the worst part, guys, those dividends that Lowe's can pay out in our pockets, that's gonna become even less. Now, this is not a controversial topic. It's not a controversial statement to say, thou shall not steal. But how about thou shall not swipe? Because we got MasterCard paying me $5.70. MasterCard is up 40% in the last year. Up 40% in capital appreciation, of course. But the good old folks in Congress, they're actually working on a bill right now that would remove any sort of credit card rewards programs. You know they're just doing their job of screwing over the middle class. After Lowe's, we have AbbVie paying me $26.94. Big juicy dividend payment from this pharmaceutical company. After AbbVie, we have Procter & Gamble. This is a dividend king, 50 plus years of increased dividend payments, never missed a dividend payment in the last 50 years plus. They paid me $8.20. Next up, we have Realty Income. How about this stock, guys? Down to its 52-week lows, down below the $50 share price for the first time in quite some time. Over a 6% starting yield for this dividend aristocrat. I still think O is as safe as it gets. Over 12,000 different properties, 99% portfolio occupancy rate. I think O just has been hit so hard with rising interest rates, just increased debt that's going to be due, that's going to eat into some of their profits, but I don't see any problems with O still continuing to pay out its shareholders dividend payments every single month from the monthly dividend company. Oh, realty income, not reality, paying me $18.32. I'm almost buying O on a weekly basis here as I inch that much closer to getting to 100 shares of O, and then I can start doing covered calls on them. And then the next company to pay me was Apple, paying me $10.02. So how about that iPhone 15, guys? Tons of innovation in that new product that they have. For example, they have a brand new... Actually, I don't know what's really new about it. So really nothing new about the new iPhone 15, but you already know people are going to buy the latest Apple products, overpay for them. And that's just going to be more money in investors like us pockets. So $10.02 from Apple. Next company is Starbucks, paying me $15.60. Starbucks is an essential. What else can I say? So after Starbucks, we get paid from the Global X's QYLD, paying me $18.18. Another income ETF on a little bit of a skid this last month, but still doing pretty good overall for the year. Then after QYLD, I got paid $31.05 from my Fidelity money market funds. Won't count this toward my dividend income, but still passive income I'm earning for doing absolutely nothing. All right, guys, then in my Roth, I got paid $1.02 from Stag, one of the newer positions in my portfolio, but Stag, they own a bunch of warehouses across the United States. So as long as manufacturing and places that people need to store their goods is needed in the United States, which it's always going to be needed, Stag is going to be a great investment. Another monthly paying REIT, $1.02 from Stag as I continue to build up this position and continue to get more in monthly dividends from Stag. After Stag, we have XYLD, not to be confused with QYLD, but they pay me $7.13. I've been thinking of selling out of XYLD for SPY. I'd love to hear people's opinion on that in the comments below. And then I got paid $31.62 from my uninvested cash from Fidelity's money market fund in my Roth. Again, this just continues to be passive income that I don't need to lift a finger for. Then after SPACs, we get a whole $2.95 from Amplify's Divo, D-I-V-O, so $2.95 from another income ETF. Altogether, I had 12 different companies pay me for a grand total of $138.99. That's an 11.3% pay raise from last August when I made just $125. And just 2 years ago, I was making less than $100 a month. This is my lowest paying tranche. This is the month where my dividends go to die. But I'm still being showered with passive income that gets larger and larger each month the more shares I gobble up. Guys, just to see how much I've improved even in 1 month, my 3-month total, that's how much I make every quarter, is now up to $672. We're that close to inching in on $700 earned passively every single quarter. That is up $6.45 since I updated you guys last month. And now my monthly average is up $2.15 to $224.02. Once my passive income reaches my monthly expenses, I can finally retire early. But that's still probably a few years away from now. I also made $63.25 from my money market funds. This is essentially risk-free money that I'm getting from just keeping my uninvested cash positions in Fidelity and enjoying that 5% interest rate that gets compounded each month, and I'm up to $445 for the year in passive income from just keeping my uninvested cash in Fidelity. That's money I earned without having to do any work. Now these days I'm still probably making more money going to the bathroom at work, but each month I'm getting that much closer to my financial freedom goals. The market as a whole has now retreated to levels not seen since early June. This is an amazing time to build wealth. Check out the videos I've already made on these topics right here. Be sure to hit that like button. My Collect Cash podcast listeners, please leave a 5-star rating once you're done watching this video. I need to get my rating up on Spotify. I want to thank my new Patreons that make this channel possible. We have the Ghost, Little Alan and Sean. I also want to thank Justin for his months of support and being an early supporter of this channel. Patreons get access to my full $155,000 portfolio and weekly updates on what stocks I'm buying, and I'll catch you on the next one.